Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the downside a quite strong level of previous monthly support, which is now termed resistance. In fact, what we can notice is that from here, this previous rejection to the upside started after this red candle was created, essentially. So this means that at this level, we have previous monthly support, which after the market broke it to the downside with this impulse and then went and retested it, it was acting as resistance, because what we know is that in the market, if there is a level that it is previously acting as support and then the market breaks it to the downside, that previous support at that point is turned resistance. So if the market then goes and retests that level, you would expect it to essentially the market reject it to the downside and respect it as resistance, which is in fact exactly what the market is currently doing here, rejecting this previous monthly support term resistance quite aggressively to the downside. Let's drop that on the weekly time frame and see what we have. Now, from a weekly perspective, the situation is quite clear. We can notice how the market is now creating weekly lower lows and lower highs. Now, that is the definition of a downtrend. A downtrend is a series of lower lows and lower highs, and that is exactly what the market is doing here. So from a weekly perspective, we clearly are in a bearish market, and more bearish continuation could be expected. And we will see that that was pretty much expected. And I will show you that when we move to the institutional positioning. So let's drop that on the daily time frame and see what we have. Now, here on the daily, the situation was quite clear. I spoke about USDJPY when the market was around here, and I explained all the reasons for which from here I was expecting first the retest of the level, this level here, and then for the market from here to create this rejection to the downside, which is in fact exactly what the market did. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But at the moment, what do we have here on the daily? Well, before we go deeper into what we have from a technical perspective, I first want to show you why this move to the downside was pretty much expected and what institutions are currently doing. To do that, let's move to the commitment of traders analysis and let's look at the data for the JPY. Now, the first thing that we have to keep in mind is that if we're looking at the JPY, we're actually looking at JPY USD, because all currencies on the spot are traded against the USD. So if we want information on USDJPY, we simply have to reverse everything. Or an easier way to look at it is simply think that if institutions are longing the JPY, they're shorting USDJPY by making the JPY stronger. And in fact, that is exactly what they have been doing, because we went from having minus 29.4k net positions all the way up to plus 95.9k net positions. So we had a huge increase of net positioning with institutions aggressively buying the JPY. With 24,100 longs added just with the last report on the JPY and 11,200 shorts getting closed. So institutions have been aggressively buying the JPY, so aggressively shorting USDJPY. That is why there is no surprise that the market has been reacting to that with a massive rejection to the downside, because institutions all along the way have been aggressively shorting USDJPY by increasing their longs on the JPY that went from 64k all the way up to 171k, and they have been decreasing their shorts on the JPY from 120k to 75k. So clearly shorting USDJPY. So let's keep this in mind and move back to the chart here. So from a daily perspective, what we have, and by the way, if you still haven't, make sure that you join my free Telegram channel, which you also find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, what do we have? Well, we have a market which at the moment is having its previous level of support being broken to the downside. And this is previous daily support that, if the market will successfully manage to break to the downside, will become resistance. So if the market here will successfully manage to break and close below this support, this previous support would become resistance. And at that point, we could expect a potential retest of previous support turn resistance and then a rejection to the downside below the level. So if we will see this break and retest, at that point, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see a potential rejection to the downside below the level, and for the market to complete this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, I would really suggest that using the link in description, you go and check out my website. In fact, here you have the possibility to gain access to the best trading program on the planet. First of all, you gain access to all my courses. Now, the courses go from the very basics of charting all the way to the most advanced topics like building automated trading strategies using the MQL4 and MQL5 languages, to building portfolios of strategies and using quantitative finance tools like the Quant Analyzer to do all of that. You also gain access to the Trading Station software with the Telegram notifications integrations, one-on-one mentoring directly with me, the COT data software that you very often see me use directly in my analysis here on YouTube. You also have the possibility to gain access to all my EAs. Now, you see here on the website presentations from each and every one of them. And you also have the possibility to gain access to my live trading show. So a live stream coming directly from my account of all the trades that I execute, open, close, manage. So basically a complete live stream. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access just below here, the testimonials, with a massive promotion. Now, there's still time to join, so I really suggest that you go and check it out. For this time slot, there are still spots. You can gain access directly from here, and automatically you will find yourself on the student dashboard using the email and password that you will create during the checkout process. So also that completely automated. Now, you find the link in the description of this video. I really suggest that at least you go and check it out, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.